Hey, good morning, everybody. Thank you for joining me Friday morning, Lotto Friday. So, first, let's talk about the dark pool. Somebody on our Discord asked about dark pool and what the dark pool is. It is basically an off market transaction, meaning you're trying to sell your apartment. You don't want to list it on MLS. You put it out there that the apartment's for sale. Somebody that's interested will make you an offer. The same is true on the dark pool. If you're looking to sell 100,000 shares of Tesla, if you sell 100,000 shares of Tesla on the open market, you'll push Tesla down 4 or 5%. You won't be able to get the price you're looking for to exit. So if you're selling 100,000 shares of Tesla, you put it out there, a buyer comes along, you can either put your ask price out or wait to see what their bid is. You match it up and there's a transaction. Over 50% of the daily activity in this stock market happens in the dark pool. So when we talk about manipulation or market makers or things of that nature, there are ways to manipulate the market. There are ways to get in and out of stock without letting the retail trader, which is you and I, understand what is going on with that stock. All right, so what's going on overnight? Understand the Eurozone manufacturing PMI. Anytime it falls below 50, it's a sign that recession is coming. The Eurozone PMI fell to a 37-month low, a 3-month low of 43.6 in June, the lowest since May of 2020. Let's remember May of 2020. A couple of months after the pandemic started, everybody was basically locked up. No one was purchasing anything. So your PMI index is at a 3-year low. European stocks sell off, having the worst week in a 3-month and mounting global fears. So that's what I'm sharing with everybody. At the same time, European, in fact, world banks are raising interest rates. Okay, you have the UK that raised by 50 basis points more than they expected. It's the 13th rate hike. Switzerland's rate raised by 25 basis points. Norway, 50 basis points expected. That's the 11th rate hike. Turkey, historic 650 basis point rate hike to 15%. And 2 more rate hikes are probably needed within the U.S. market by the end of the year. No rate cuts. As rates go up, it puts downward pressure on the market. Why? Because liquidity leaves the market. If someone's able to earn 5-6%, tax-free, something to that extent, banks, hedge funds, institutions, they pull money out of the market. Now, here's an interesting point about Bitcoin as we're talking about interest rates going up and currency being more expensive. 78 of the 19.4 million Bitcoin on the open market is currently profitable. So about 80% of Bitcoin is profitable, buy and hold. Talk about my position yesterday. I was in some Starbucks calls. Again, not that I'm bullish the market, but I was bullish Starbucks at the time. Starbucks was just around $100 a share. It bumped up to close to $101. It was $100 and like 80 something cents. I got out. So I was in at 79, in at 72, in at 69, out at $1, making about what? 34% on that trade. Skip that. Skip what Biden's saying. I mean, this guy is just, it's amazing. He called President Xi of China a dictator. I mean, how he didn't think there would be kickback on what he said. And then you have Hunter Biden, and they released a WhatsApp message from Hunter Biden saying he's sitting there with his father and where's the money. I mean, I can't believe this shit goes on with the politics today. I mean, it happens on both sides, Republicans and Democrats, but it's amazing that this stuff gets out. It's amazing how stupid some people are. I'm sitting here with my father and like to understand why the commitment hasn't been fulfilled. I mean, the big man, he calls him. I mean, just stupidity. Okay, so I mentioned my play on Starbucks. Why did I get out of all my positions yesterday before close? Because I have the worst experience carrying positions overnight. I'll start out each day and I'll be down 30%, and then I'll work back to even or even plus 10 or 20%, call it a day. Whereas if I don't start out down 30% and I enter into the same positions on open or even 5 minutes after the open, I could be that much more profitable. So I've changed my the way I do things. Powell says tightening credit may substitute for one rate hike. So he's basically saying what they're doing is quantitative easing. Let's remember, as rate hikes are going up, the Fed is also reducing their balance sheet, which went from $3.5 trillion to over $9 trillion during the pandemic. They want to reduce their balance sheet back to the $3.5 trillion, which means they have to sell assets. Assets could be treasuries, assets can be stocks, assets can be other derivatives, it can be bonds. So again, it puts downward pressure. This is interesting. Federal debt, right? The government has already issued close to $638 billion worth of treasuries since the debt ceiling was extended. Now, if everybody remembers, I said the number was going to be closer to $1 trillion. So we're getting there. We're 2/3 of the way there. They mentioned they wanted to have that by the end of June on their balance sheet. So if the Fed has to ease up again and issue more T-bills, another $300 billion worth in the next week, week and a half, that's crazy. The Fed is also reducing its balance sheet at the fastest pace in history, which is what I mentioned, quantitative easing. So, it is what it is. Okay, let's talk about the SPY. Let's get right into it. What are my expectations for today? So we'll go back to last Friday. Last Friday, I mentioned that big tech was having a bit of a sell-off. Remember, I was a Google bear, which I changed. Once Google hit that 121 range, I sold my puts. I said, okay, I can see some buying taking place in Google. With that said, the way the market closed yesterday, Thursday, was extremely strong for big tech. I saw Amazon making a huge push. I saw Google making a push. I saw Apple going green and finishing strong. So you have to watch those stocks today. Again, I'm watching those stocks on open. If we see those stocks being bought up at 9:50, at 10 a.m., 20 minutes into open, then that is definitely a bullish sign, a continuation of a buy the dip. Let's remember, when the market spikes overnight, what do? We fade the gap up. So we gap up and we fade it and go down. When the market gaps down, what do they usually do? They usually buy the dip and the market fades higher. So we can talk about scenarios of the SPY. Yesterday, the SPY closed at 436.51. Understanding the high on yesterday was 436 and change, the low 433.60. You saw about a 3-point move. So for the third consecutive day, right, we had Tuesday, Wednesday, and Thursday, 3-point range on the SPY, meaning when you find the top of the SPY, you can find the bottom by subtracting 3 points, vice versa. When you find the bottom, you can go to the top. Yesterday, when the bottom was in at 433.60, I called the top for everybody on Discord. I thought we would see 437.10. Now, we got pretty damn close to that towards the end of the day. I think we were at 436.90, 436.86, so maybe 20 cents away. Again, that would be my exit strategy, which is why I exited a lot of my options at 3:50 p.m. I did get into a new option at 3:55 p.m. that I was going to carry over today. It was not a good trade. I traded some SoFi lotto calls, and what happened as soon as the market closed? An analyst came out, and this guy has the worst rating possible, but he basically downgraded SoFi to $5. What happened? SoFi went off 2%, is now off like 4 or 5% pre-market. So again, I kind of screw myself. I say I'm not going to play lottery calls or puts. Why? Because you must be right. You must be instantaneously correct. And it's better to give yourself another week. So I am almost done with lotto plays going forward. I'll always buy the extra week. Let's talk about my Starbucks options yesterday. When Starbucks was at $100 a share, I bought some Starbucks calls, but I went out till next Friday in case I was incorrect. Now, I happen to have been correct that it went from 100, actually fell to 99, like 86 after I made the purchase. So I was down 10 or 11% to start. And then I went positive 33%, decided to get out. Why? Because I didn't want to hold Starbucks overnight, just for the simple reason if we gap down, which we've been doing most every day this week ever since last Friday. Remember, there's downward bear pressure on the market. And again, liquidity is leaving the market. As liquidity leaves the market, stocks will go down more. Now, does that mean we're in a bear run of this bull run market, right? Because they tell you, is it a bull run? It's 20 day, it's over the 200-day moving average. It's only a few stocks that are so bullish that are dragging the market higher. What else did I sell yesterday? I sold my DraftKings. Here's my example really quickly. And this is what I wanted to share now that everybody is like paying attention. This is my lesson, okay? I spoke about buying an extra week to your options. So I'm going to give you my example of DraftKings. DraftKings, I was positive. I bought one call option that expired today, one call option that expired next week. The call option that expired next week was only up 86% when I sold. The call option that expired today, Friday, was up 161% when I sold. So yes, if you're correct, you get that extra 100%, that extra 80%. You double your options play. It's a great return. However, if you're incorrect, and I'll give you an example about being incorrect. Let's say you're incorrect about that option and I took the other side. I would be down 90 to 95% on that options play. If I gave myself the extra week, the likely option play would only be down about 30%. So the point is, on the way down, if you're going to be right every time, then it's great. You go out 1 day, 2 days, you're safe, whatever it is. If you're incorrect about an option play, it makes so much more sense to go out the extra week to give yourself enough time to be correct. So that was my example with DraftKings. I got the Starbucks example. This is interesting. Total U.S. Total short interest on US stocks, right? Total short interest from all the firms, the hedge funds, everybody that's short in the market is over $1 trillion. It's the highest mark since April of 2022. However, total unrealized loss on those short positions are over $100 billion. So understand they're shorting Tesla, they're shorting Nvidia. Short sellers have lost over $25 billion this year alone just on those two stocks. Okay, so despite the negative sentiment, the S&P still looks unstoppable. It keeps pushing higher. Technically, we're near in a bull market, but the short bets are skyrocketing with every breakout higher. So we go a little higher and the short bets are increasing. Now understand these short bets, people talk about how many days they have to cover. Oh, they only have 2 days. Oh, they've got to buy this stock. That's complete bullshit. They can keep rolling their position over. They can keep shorting the stock. They are paying minimal interest, whatever the interest rate is. Again, if they're expecting the stock to give back 10% and they're paying a fraction of that, then they're going to hold on for a number of days. So what else could happen? The fact that there are so many short plays, the market could squeeze higher. The market could squeeze higher, meaning the market goes fading higher on lighter volume. All of a sudden, it gets pushed higher. And some of these people that are in short positions, whether it's Nvidia or Tesla or Microsoft or Amazon or Apple, have to cover their positions. When they cover their positions, they're paying the higher price for the stock, pushing the market higher, which is what is called a squeeze. Again, this was Bank of England. Hikes their rates past 5%. Understand traders that are trading the FTSE, which is the London Exchange, actually think the Bank of England will end this year at 6.25%, meaning another 125 basis points increase. So we're talking about our U.S. markets, and we're talking about possibly 2 more raises of 25 basis points, which would be 50 basis points by the end of the year. No cuts. The Bank of England, they're actually assuming, the traders are assuming another 125 basis point increase. So, and we already know Europe and the Eurozone is technically in recession. Their PMI number came out this morning down to 43.6. Anything under 50 tells me that they're in recession. Interesting downgrades coming. Morgan Stanley downgraded Tesla to equal weight from overweight. Overweight means like an extreme buy. Equal weight's like, okay, we still like it, but it's more of a hold right now. They increased their price target while downgrading the stock to $250 a share from $200. So they increased their price target, 25%, yet downgraded the stock to hold. Let's see, highest interest rates in Norway. Europeans still dealing with major inflation issues. I mentioned that. I mentioned the short bet on U.S. stocks hitting $1 trillion, the most since April 2022. Let's just see if there's anything interesting right there. No. The country's bet signals and traders have included the S&P is roughly 14%. Now that's not that important. Okay, so that's basically what I've got for you guys today. Let's see if you guys have any questions. We mentioned Bitcoin. Hit that like button if you like what I do. I'm here every morning, 8:30 a.m. Please join me. Pre-market analysis. If you have questions, you put them on the side. I can answer questions about specific stocks, specific option plays, what we're seeing in the dark pool. Let's remember the dark pool trades over 50% of the daily activity. So if you're seeing 12 million shares of Tesla trade on an average day, understand there's probably 12 million shares of Tesla trading in the dark pool. What do I think about the approval of the Bitcoin ETFs? Again, I mentioned this yesterday and 2 days ago when Bitcoin was 28,000 that we would likely see a Bitcoin run to 33 or 34,000 with all these new ETFs coming out and asking for approval from the SEC. You have Deutsche Bank, you have Citadel, you have Fidelity, and I think you have, there are definitely 2 more. If you want to follow us on Discord, I mentioned you guys have to start using the Flow and Algos room. Why? Because with the uncertainty in the market, you've got to follow big money. Big money is where it's at today, meaning it's not right 100% of the time, but if you're following big money, then you understand you're on the right side of the trade more often than not. And what I like to do when it comes to big money, I'll look at something like golden sweeps, and then I'll look to get better entry. Golden sweeps are when someone sweeps all the options that are available in that specific price range or strike date off the board. So they're sweeping everything. So I'll go down and I'll find the last sweeps on the day and I'll say, okay, well, they're in Nvidia puts expiring. So they're going out till January. It's a leap year. They paid 127 million. I mean, 1.27 million. They're looking at the 250s. So I might say, okay, well, that's going out a little further. 622. These go out till September. These are Amazon calls. So again, Amazon bullish, Microsoft bullish, Meta bullish. So knowing that an Apple here is bearish, but knowing these trades, I guess I actually might look at an Amazon. When an Amazon pulls back to maybe 126 or 125, I might get involved in the same type of Amazon calls. Again, I'm looking for a pullback. I'm just not going straight into the option. You find what you're looking for, and then you kind of wait for a pullback. You wait for a pullback so you get a better price. So what else do I like to start off the day? Well, someone already looked this up for me. Dark pool levels in the SPY. Remember, we closed right at 436.51. And let's just see where we are this morning. This morning, we're at 433.20. So again, we'll go to the dark pool levels. We'll do it this morning. We're at 433.20. Understand, huge dark pool level here at 434. So 434.41 is going to be a key level. Why? Because if we can't find support at this level, and yes, the market's opening at 433.20 right now, so we're a little under that. Let's assume we open closer to 434. We could dip really quick to 433 and then spike. I'm really looking to see if we find support at this level, 434.41. If we do not, then I'm assuming the market is going down to the next level lower, which is 431.70, which would still be another 50 or 0.5% lower than where we are now. So the fact that we're off, let's see, we're off 0.76% right now pre-market. If we go down another 0.5%, you're talking about a 1.25% move on the day. So that's just what I'm looking at. Again, if we break down, you're looking for support 431.70, small dark pool level. So you're really talking about 429. Will we go that low? Again, let me just give you your bear case scenario. Your bear case scenarios, man, there's just selling all day. There's downward pressure most of the morning, and we possibly touch that 431.70 level, which would put us off more than 1.25% this morning. So yeah, I guess that was the question. Says under 433, do we drop to a lower level? Yeah, I mean, that's basically what I'm talking about. Your 434 level, and it's 434, I think 71, did I say? 434.41. Okay, so once you drop under that level, if the market gets bought up and cannot break that 434, let's just call it 434.50. You see the market up to 434.50, it rejects. See the market try 434.50, it rejects. Then you know it is likely we're going to touch 3.25 points lower to that 431 level. So again, watch the levels. Sit in front of your computer if you're trading. Have on Trading View. That's what I like to use. So right, is that what it is? Yeah, Trading View. It's a free service you can use. So what else am I going to do? I'm going to go back to Discord and I'm going to look at the top flows. Top flows tell me the most actively traded options. So what is that going to tell me? It's going to tell me that I can get in and out of any of these plays today very quickly. So if I'm trading, whether it's bullish or bearish, if I'm trading Tesla, there's a ton of liquidity in Tesla. Amazon options, Microsoft options, right? When I go to the other side, I might look at an Oracle. I'm not going to touch gold. I'm not going to touch ATVI. I might look at NVIDIA or Snow. Now listen, when we talk about Tesla and we talk about the range of movement for like Tesla yesterday, again, Tesla, I think, moved about 14 points, meaning the low end of Tesla to the high end of Tesla, you're talking about a 14-point move. There's a lot of money to be made. It doesn't mean you have to be a Tesla bull or a Tesla bear. The same is true when you look at a stock like NVIDIA. 2 days ago, I think it moved 16 points. So from the high side to the low side, and again, with NVIDIA, what do we know? We know they love to buy the dip. So what was it, 2 days ago? So we're talking about Wednesday. I think NVIDIA was down to what, like 420, 424, and then finished up at 439. So at 424 on the low end, you're getting a 15-point move to the higher side. Now, the opposite can be true as well. Say they sell NVIDIA and you see NVIDIA pop in the morning and the market fades all day, and you can get NVIDIA puts at 441 and then it can fade down to 426. So again, there is some good volatility. I like to look at top flows, which gives me an idea. I wasn't even thinking of trading Oracle, but now that I saw, someone's looking at Tesla. Now that I see Oracle on one of these top flows, again, I'm going to stay away from gold and silver. Stay away from Snow. It's more institutionally owned. I might look at Meta. Meta had a crazy run towards the end of the day. So real quick, when we talk about lotto options, and this is a good story for everybody, lotto options. Here are two ways you can play lotto options, and it's a little late for a Friday play, but you go into yesterday, and if you say tech has been strong and I'm going to keep buying tech, You could look at something like, I think it was Amazon. You could look at like the 130 calls when Amazon was trading at what, 124, 123 yesterday. And yes, you're $7 out of the money, which makes them ridiculously cheap. But you could have bought Amazon calls for like $11 per contract. And then the CM Amazon calls, I think it was the 130 calls, went up to like close to, I think it was $1.79, $1.80. You're talking about what, 18 time return. Let's even say 17 time return. So you only have $100 and you bought 9 contracts at $11 each. That's $99. Your return is going to be somewhere close to $1,700. Now, again, let's just say the markets were strong today and Amazon spiked another $3. You'd be talking about $133. You'd be talking about $3 for those contracts, or $300 contracts that you paid $11 for. So when you're looking for lotto plays, it's not like, hey, DraftKings is at $24.96. I'm going to lotto the $25 calls. It's thinking a day ago when DraftKings was at $24 that, hey, if DraftKings runs for the next day or day and a half, I'm going to get in at $24. I'm going to buy the $25 calls. When it goes to $25.60, those calls will be worth $80 a contract. Since I'm buying them, there's no time left, and we're $1 away or 4% out of the money. They're going to be extremely cheap. So you got them for like $18, $20. When they go up to, $80, you're talking about a 300% return on your money. Yeah. Okay. Thank you, cool chick. Yeah. So NVIDIA, 425. So understand the ranges of NVIDIA. I've seen NVIDIA go from 426 to 440 in one day. We've seen 418 to about 436 in one day. So let's say NVIDIA sells off a little more and goes down and clicks at 418, yet it finishes up the day at 434. Getting it at 418, selling at 434, whether your options expire today, which would be extremely risky, or you go out till next week. Again, I'd like to give myself more than a week to get ahead. Let me just see what's on my my stock watch list today. Yeah, holy shit, man. They're really doing a number on that one. SoFi, again, the analysts came out, they downgraded the stock, put it at a $5 target. It's off 7% this morning. PayPal's off 1.27%. Some squeeze stocks are off. You look at Upstart, which got crushed the last couple of days, was at $39, $40, is now at $32. It's off 3% this morning, so we're probably back at $31. Alibaba, again, Chinese struggling. Google. So Google's down to 122.37. Remember, I sold my Google puts when Google was 121. So even though they're throwing up on Google this morning, again, it's higher than my exit strategy. So please, everybody, have an exit strategy. I was a Google bear, but I said 121 would be my exit. It went down to 120, like 56. I didn't secure the max profit, but I got damn close enough. And then they bought Google up. It was after hours is 125 yesterday, closed at 123.87. So again, it's just a lot of volatility in some of these larger names. So I'm really looking to see if they're buying up, big tech this morning. So we'll see what happens. UVXY had a reverse split, 10-for-1 reverse split. So if you're waking up and you're seeing UVXY is above, $20 a share, you're wondering why. It's because it was a 10-for-1 reverse split. Again, I'm looking at the Russell. Now, when we look at the Russell past 5 days, the Russell, here's the Russell. So here are your small cap tech stocks 5 days in a row. We're going to the downside. So that's definitely bearish pressure. And when you look this morning, the fact that the Russell closed at 183.33 and is opening up in the 180 range, 180.69 off 1.41% right now. Again, people might continue to buy the dip. So if I had to guess, although the market is telling you bearish, although interest rates are going up, I'm going to say there's going to be a little continuation of the dip. So you'll see the Russell off maybe 1.6%, like another 0.25% off before it gets bought up. And when it gets bought up, you're probably going to see it at some point today touch that 183 number being only slightly green. So whereas it's off this morning, $2.65, 1.45%. At some point today, it will likely only be down 0.2% or something to that. So you're talking about a full 1.2% move. You're talking about a $2.20 move. So again, I'm going to look for the bottom today. I'm going to look for volume spikes when the SPY hits levels that I think it might bounce off of. So the SPY is sitting at 433.11 right now. I'm going to look at 432.50 and 432 flat, which will probably happen at 9:50 all the way to 10:20 a.m. Let's remember my timing. Generally, you get a lot of activity from 9:30 to about 9:45. I let things play out. Things generally play out by 11:10 Eastern time. So a little under 2 hours into the market. So again, if you're watching and things go down and you're like, oh man, it's the worst. It's 10:14 a.m. We've seen the bottom. No, we probably haven't. There's generally a double dip. So please be prepared for that. Quick ways to play double dips. When you see the market dipping like that, you're getting your puts. When it spikes up a little, that's when you get in your puts, and then it goes down and does a double dip. Again, nothing goes continuously down. So again, that's why I like to take profit, even if my options expire a full week out. I do like to take profit because I'm sick of riding the elevator. I'm sick of seeing my positions going from 25% positive to 25% negative, back to 25% positive. I don't need that stress and aggravation. How do I plan my exits? Let's leave it on one last lesson right here. Whatever option I'm looking at, calls, puts, whatever stock or derivative it's based on, I like to find the lowest price of the day. So we got into an option. I paid $100. The low on the day is $75. After I bought it for $100, it goes down to $75. I do think it's going higher. I plan my exit strategy based on the low number of the day, meaning if the contract is a $75 contract on the low end, I double that. I go, okay, $150. That's my exit strategy. It doesn't matter if I got in at 100, 95, 110, whatever it is. I was down 22%. I was up 11%. I know what my exit is. If the low on the day was $72, I'm going to double that and look for $144 on the way out. If I'm in at 100, I can sell at 144 or something to that extent. I'm still going to make my 44%. It gives me a good inkling of what I'm looking for to exit. Again, if you like what I do, hit the like button. World Series, casinos going out. Yeah, poker doesn't generate a whole lot of money for the casinos. The slot machines do. So that would be not something I would look at. Again, it's more about China and Macau. If China reopens and China is struggling, the economy is struggling. But if you see China all of a sudden get a pop and the Chinese economy is doing well again, yes, all these casino stocks, Wynn, Las Vegas Sands, they'll all do extremely well. But as the Chinese market is struggling, these casinos are just going to stay and hover around the same area. I don't see them giving up much. I don't see them accelerating higher that much. Again, casinos make a shitload of money, but it's about the number of people that go there and the amounts of losses. With that said, have a great weekend, everybody. I'm heading over to Discord. You guys are more than welcome to join me. And I'll see everybody on Monday. So have a great day of trading. Be safe, stress-free, secure profit. The 3 S's. See everybody.